Good morning, everyone, and welcome back to XRP Daily Brief. I hope you're doing great. Today, we're going to take a deeper, more comprehensive look at the current state of XRP, not just the recent price movements, but the broader forces shaping the asset, the concerns many of you have expressed, and the realistic expectations we can have for the next phase of XRP's market cycle. Over the past few days, I've received many messages asking the same thing. What exactly is happening with XRP right now? Is everything still on track? Do the higher targets we've discussed still make sense? Or are the latest pullback signs of something more concerning? These questions are completely normal, especially during periods of market hesitation. When price action is choppy and the overall sentiment across crypto starts shifting, emotions tend to rise. But today, we're going to step back, take a calm and structured look at what's happening, and put the current situation into context in a way that can help you navigate these moments with clarity. So let's start by acknowledging the obvious. Recently, XRP has been underperforming relative to the broader market. While Bitcoin and some altcoins have shown fairly typical fluctuations, XRP's downward pressure has been slightly more pronounced. Many of you notice that, and the instinctive reaction is often concern. But the truth is, nothing about this move is unusual, unexpected, or structurally damaging. If anything, it fits into the broader narrative we've been discussing for months. XRP has always been a lagging asset during certain phases of market rotation. Historically, there are cycles where liquidity prefers Bitcoin first, then flows into high-cap assets, and only later shifts toward utility-driven assets like XRP. This lag tends to create moments where XRP looks weaker in the short term, even though its long-term structure remains entirely intact. But beyond the typical price cycles, there's another layer worth exploring: the macro environment. Today is especially important because we have the release of the PCE Price Index and Core PCE, which are two of the most important inflation indicators for the United States. Whether people realize it or not, the Federal Reserve pays extremely close attention to these metrics when evaluating monetary policy. If inflation cools, markets breathe. If inflation surprises to the upside, markets tighten, crypto included. Now, why does this matter for XRP specifically? Because XRP, unlike purely speculative assets, tends to respond more significantly to macroeconomic pressure. It sits at the intersection between traditional finance, regulatory developments, and emerging digital asset infrastructure. When macro conditions tighten, assets tied to institutional use cases tend to absorb more pressure. When conditions ease, they often benefit faster than purely speculative coins. So the PCE data becomes a meaningful catalyst not just for crypto as a whole, but for XRP in particular. This leads us to the order flow situation. Over the past several sessions, the underlying order flow for XRP has shown certain patterns that help explain the recent weakness. For instance, despite moments where funding rates turned negative, which is usually a sign of bottom formation, the persistence of those negative rates indicates that the consolidation process is ongoing. Negative funding rates don't mean an instant reversal. They mean the market is searching for equilibrium, clearing excess long positions, and building a base from which accumulation can restart. Another important aspect is the relationship between long positions and price response. Recently, we saw a noticeable increase in long leverage across the market. Normally, such an increase would generate at least short bursts of upward momentum. This time, however, the added leverage didn't translate into significant upward movement. This is a classic indicator that leverage traders may be entering too early, during a phase when the market is still biased toward cleaning out liquidity below. When leverage rises without price appreciation, it becomes increasingly likely that the market will test the lower levels to flush out those positions before initiating a sustainable upward move. This brings us to the imbalances below the current price. XRP tends to fill its inefficiencies systematically, and the area around the $2 mark remains a crucial zone. Not because it represents a danger point, but because it represents a strong structural support that has both technical and psychological significance. There is not a single compelling argument, technical or fundamental, suggesting that XRP is at risk of a deeper collapse from that zone. Instead, the market appears to be doing what it has done many times before, clearing the path before the next expansion. So if we look at the big picture, what do we really have? We have short-term weakness explained by macro pressure, order flow imbalance, and liquidity hunting. We have midterm strength supported by fundamentals, institutional interest, and the fact that XRP continues to play an increasingly significant role in discussions around cross-border settlements, liquidity optimization, and digital infrastructure modernization. And we have long-term conviction rooted in the broader shift happening within the global financial system. Now let's talk for a moment about fundamentals, because this is where many newcomers get confused. Ripple as a company continues to make progress, expand partnerships, strengthen its enterprise solutions, and integrate its technology into real-world financial rails. But there is still a disconnect between Ripple's corporate achievements and the price of XRP. This disconnect frustrates people, but understanding why it exists makes it far easier to stomach. At this stage, institutional adoption of Ripple's technology does not automatically translate into immediate demand for XRP. The transitional phase between old systems and new systems is still unfolding. Banks and payment providers move slowly. Regulatory clarity is still in progress in many jurisdictions. The ETF ecosystem is still forming. Tokenized liquidity systems are in their early phases. So expecting XRP to instantly reflect every Ripple milestone is unrealistic. Instead, what we see is an accumulation of infrastructure being built layer by layer. And once that infrastructure reaches critical mass, liquidity demand tends to increase far more quickly and visibly. Now, this doesn't mean we assume price appreciation based on hope or faith. It means we understand that XRP's role as a high-efficiency liquidity token becomes meaningful only once institutions are ready to leverage it at scale. And although that process is slow, it is undeniably progressing. This brings us back to the community's concern. Are higher targets still realistic? The answer is yes, with the full understanding that markets do not move in straight lines. The target of $2.40 to $2.41 remains structurally valid. The broader trend hasn't changed. The temporary pullback doesn't invalidate anything. If anything, it makes the next upward movement healthier by clearing excess leverage. As for the scenarios ahead, they are quite straightforward. If today's inflation data comes in favorable, the entire market could experience a relief rally, and XRP could quickly move back into the mid-$2.20 range. If the data comes in unfavorably, XRP may remain in consolidation a bit longer, gradually filling imbalances and building a stronger foundation near support levels. But regardless of the short-term outcome, the larger pattern remains consistent: accumulation, stabilization, expansion. XRP is currently in the second phase, stabilization. And historically, this is where most of the doubt, fear, and uncertainty surface. Not because the asset is weak, but because the market is forcing participants to confront volatility and uncertainty. Now let's talk about something often overlooked: market psychology. During periods of consolidation, many traders become impatient. They compare XRP to faster-moving assets. They assume stagnation is a sign of failure. But in reality, smart money often accumulates during these very phases. When price moves sideways while fundamentals remain intact, it is rarely an accident. The greatest upward expansions in XRP's history have come after extended consolidation phases. Not every consolidation leads to an explosion, but every explosion is preceded by a consolidation. That's the function of accumulation. Now let's connect this to the larger macroeconomic narrative. The world is undergoing a transformation in how money moves, how liquidity is managed, and how financial systems communicate. Central banks are actively exploring digital currencies. Banks are restructuring settlement systems. Global payment corridors are shifting. Regulatory frameworks are solidifying. The concept of real-time settlement across borders is no longer theoretical. It is a requirement of the modern financial world. In this environment, assets like XRP, which offer speed, efficiency, and interoperability, are positioned differently from speculative meme coins or narrative-driven hype assets. XRP is part of a broader infrastructural shift, one that unfolds slowly at first, then all at once as adoption reaches scale. And that's why the short-term market noise doesn't change the long-term trajectory. When we connect these elements, macro conditions, order flow, institutional behavior, liquidity patterns, psychological cycles, a clear picture emerges. XRP is not failing. It is not breaking structure. It is not invalidating anything. It is doing what assets do in transitional phases, testing support, absorbing liquidity, and preparing for the next expansion. So as we move forward, what matters most is perspective. If the next days bring volatility due to economic data, that is simply part of the process. If XRP revisits support levels near $2, that is part of the process. If consolidation lasts longer than expected, that too is part of the process. None of these outcomes change the fundamental structure. My outlook remains unchanged. XRP will likely consolidate further, then recover into the $2.20 to $2.28 range, and eventually aim toward $2.40 to $2.41 once the liquidity landscape allows. The time frame might shift, but the destination does not. Thank you for tuning in to XRP Daily Brief. Stay informed, stay patient, and remember that market cycles reward those who understand the bigger picture rather than react to short-term fluctuations. I'll see you in the next update.